What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content. Good morning, everybody. Welcome back to another live stream. Happy Friday to you. Hope you're all doing well. I've just dropped that link there for you guys if you are interested in the free 8cap Edge Finder offer. It's a pretty slick deal, so take advantage of it if you're interested. We've offered that. You know, we've done that offer now with 8cap for, gosh, I don't know, like 3 years or something. And a lot of people have gotten free copies of Edge Finder through that program. So check them out if you like 8cap, if you're considering switching brokerages. Might be the move for you if you like it. All the terms and conditions, like I said, can be found within that link there. All right. So what do we got this morning? We have CAD. Someone just pointed out CAD. Sluggy says CAD beats on jobs data. What's going on with dollar CAD this morning? A little bit of CAD strength coming in. CAD yen, just curiosity. CAD Swiss, a little bit of strength here coming in. Look at that Canadian dollar. Coming in decently strong here for several currency pairs. There was also some yen movement overnight that I thought was kind of worth touching on. Although the dollar yen briefly moved lower, we did see a bit of a bounce here. UK 100 requests in the chat. I'm actually interested. Let me just refresh this. Hold on, my computer is being slow. Hold on. I need to let that refresh there. That should be fixed in just a moment. Sorry, I'm closing out all my, I've got like a million tabs open right now. Okay, that should hopefully be better. Oh, my screen is frozen. Hold on, guys. Sorry. Friday lulls. Fix that. Should be better. Okay. Let's take a look at some stuff. UK 100. UK 100 has a +3 within Edge Finder, so going to be mostly a neutral score for me here. Fundamentals look okay. Technical's a little mixed. COT, well, we don't have COT data for FTSE. It doesn't exist. Crowd sentiment neutral. Not a chart that I'm in love with, to be honest. I do like the idea. It depends, you know, if you're looking at something like emerging stock markets, if you're looking at non-US stocks, let's call it, you are in some ways kind of like looking for a weaker dollar. Like if you think the UK 100, the DAX, if you think Chinese stocks, Brazilian stocks, Latin America stocks, like Southeast Asia stocks, like if you think those are going to, or if you're looking for a rally in those things, typically a weaker dollar is your friend and a stronger dollar is not so much your friend. So the dollar to me still looks generally strong. So I don't have a lot of love for piling into international stocks right now, personally. At some, you know, I think if you're like longer term, if you think the dollar has like limited upside, like if you think the Middle East stuff's not going to be terribly inflationary, or if you just think the dollar like has limited upside, One way to express that view could theoretically be to look at international stocks, which benefit from a weaker dollar, right? Why is that? Well, a weaker dollar, the dollar strengthening means in some ways that it depends who you're asking. Who's it good for? Who's it bad for? A weaker currency locally is good for exports, right? Like if my currency, like here's a local example. When the dollar is like more expensive for people outside of the US purchase our products like it's a little bit more burdensome because it's a little bit more expensive, right? When the dollar goes up against their local currency, it makes it harder for them to purchase our goods here at A1, right? That's like Edgefinder. It is a real thing for us as a small business. When the dollar is really strong, a couple years back, like this was challenging for a lot of people who wanted to buy our products. Like when the dollar is like at very high levels, it becomes very, very expensive for my European friends, for my friends in Asia, my friends in, all over the place, Africa, wherever, who want to purchase Edgefinder. It becomes out of reach when the dollar gets really expensive. So that's like a localized example. But also for, international stocks, a stronger dollar oftentimes is because there's like inflationary pressures. And typically other places, at least in the last few years, have experienced more painful inflation, etc. Nick, why are the U.S. indices falling today? The U.S. indices are like sitting right there at the all-time highs. So I'm not sure where you're seeing the fall. I wish there was a fall. I wish they were down more because I've been looking for pullbacks for quite a while. But yeah, nothing. I mean, we're not talking about down at all today. We are, I mean, maybe if you're looking at like the 5-minute chart, but I mean, we are sitting there. We're sitting pretty in terms of indices. These things are super strong overall. If we're looking at gold, gold is lower today, although, kind of just hugging this trend line that we've been discussing a lot on the channel. Nick, come on, let's talk about options. Rabies, my friend, we won't be talking about options on this channel very much. I know you've been asking that often. We are not options guys. I could tell you factually that most of my audience is not big in options on this channel. So let's talk about gold. So if we're looking at gold, gold hugging this downward trend line, I think has kind of a decision point here. I've seen a lot of people marking up these charts, this kind of, we're poised for a break one way or the other on gold. And yesterday I got a lot of heat, man. I got a lot of people who are like, Nick, you're one day you're bullish, one day you're bearish. Objectively, like if you actually look at my positions, that's what matters. Like, yes, YouTube thumbnails, titles, I'm all over the place. Gold's about to explode. Like, that's what you have to do in content creation land to get anyone to see your videos. Otherwise, we put a day's worth of work into filming, publishing, editing, all the stuff, and nobody sees the stuff. So you have to play the YouTube game. But that said, if you actually watch my videos, I do think there is a possibility that gold does explode, but I'm not long gold right now. There's a couple scenarios we talked about yesterday about CPI. Is CPI going to potentially be the powder keg that gets gold to actually break the downtrend? Now, fairly spoken, it could also be the thing that brings this thing back down. But I've discussed this recently. I have a neutral but open mind on where gold goes next. Like I have a neutral outlook. I'm not currently short or long gold. And in my actual positioning, I was short gold for several months. Well, I would say like the better half of like 2 or 3 months, I was in shorts or bearish on gold. And then in the last week, I have flattened out my position. And when I said I was going long, I wasn't lying. I just went long to cover my short position, right? So if I was, 500 shares, if I was short 500 shares of GLD, I bought 500 shares to close out my position. That's technically I did buy shares to buy back my short position. Anyways, when it comes to where I think gold goes from here, I do have a bit of a neutral view, but from a technical perspective, the trend is still down, right? If we're looking at like the daily chart, for example, like a higher time frame trend, moving averages taken into consideration. The sellers are still in control. Nick, do you take these sad comments seriously? Please don't. I appreciate you. Don't worry. I don't really, but sometimes they reflect what people are like. I sometimes use comments, good and bad, right? Sometimes people make a really positive comment and I discuss it because there's something to learn from these comments. I'm not bothered by them. I have a system that I've traded for a long time. I'm not going to change what I do because of YouTube comments, but there are learning lessons within them, because a lot of times people's, angry comments or their frustrated comments with what's happening in the price of gold are in a larger way something that we all feel, we all experience as traders, and we can learn from them. Even if they are a little bit ignorant and a little irrational, we can still learn from them. So that said, I do still think from a technical analysis perspective, gold is still in a downward trend. But I do also think that with CPI next week, you could go either ways. And that sometimes frustrates people. Like that's what I think people are like, Nick, what the heck? You're just saying it could go up or it could go down. But that is an important perspective that you can have in markets. You're allowed to be neutral. You're allowed to say, I actually just want to watch and wait and see what happens before making a more decisive move in my positioning in gold. Does that make sense? Like there are three positions. You could be bullish, you could be bearish, or you could be waiting and neutral. And that is a very valid spot to be in, because if you're always, and that's the other thing is, if I just came on here and every single day, all the time, I'm bearish on gold, right? Regardless of the new information that's coming at me in my system, that wouldn't make me a rational trader. That would just make me somebody who's just bearish on gold all the time. But I'm certainly not, right? I'm open-minded to shifting to the bull case. And if I take a look at my readings for gold, it's slightly tilting in the direction of bullishness recently. So I want to also show you this. Crowd sentiment is getting bearish on gold again, giving a contrarian bullish signal. Let's go look at that, because I'm really curious what that is telling us right there. So if I go over to my gold put call ratio, look at this. See, this is what I mean by like, okay, now you've got the crowd really bearish. Let's also look at this from a net options flow perspective, and we'll switch over to gold here. Interesting. So options flow has gone very positive to now shifting. I would say this is kind of neutral in terms of volume flow. So we're not getting any really extreme readings there. But on a put call ratio basis, which is much quicker to adapt, like this is sort of like your fast moving average. This is your slow moving average of reading options flow. But what this is telling you is there was a huge spike in bearish put volume in the last trading session. Yesterday is July 9th. Yeah. So when I'm looking at this, what that's telling me is that when we are looking at July 9th, which is interesting, this is really interesting, that took place on an up day. Very rare do you see that. Wow, that's actually really interesting. So yesterday you had an up day in gold, and at the same time, there was a lot of put volume that came into gold. So bears kind of crowded the trade yesterday, which is really intriguing to me. What that tells me is that the way to read the put call ratio, in my opinion, it's not, okay, it's extreme, now we go long to fade the crowd. But instead what it means is, okay, everyone seems to be rushing the put side now. You have a lot of bearish sentiment coming into this chart. So if we get a catalyst that offers the bulls something to go off of, like a cooler CPI print or resolution in the Middle East, this market is primed for an explosive move higher. We call it a powder keg situation. When you have these options flows that are very positioned one way. Now, what I'd like to see is I'd like to see this net options flow tool confirm this idea. Like, okay, yes, you had a big spike, but let's see if it sticks, right? Like this indicator is nice because what you can do is you can look and see, like, if we go into super negative territory, like you get tons and tons of flow negative, that would tell us, all right, people are aggressively getting rid of calls, selling calls, buying puts, etc. Not touching gold till CPI. I think that's a fair statement. The only thing I'm considering doing with gold is possibly selling some cash secured puts on it, which, Rabies, my friend, you want to talk about options? I might be interested in selling some cash secured puts on like GLD or GDX, but that's probably the extent to it. Maybe I would. You can't, unfortunately, you can't sell strangles on. And if you're not an options person, it sounds like I'm talking about nonsense. What the heck is a strangle? It's when you sell a call or you sell a put simultaneously, and you benefit from the chart going nowhere. Like, I'm kind of in that camp. So I actually will be exploring that opportunity today when the options market is open up. So let's also just take a look. GVZ, this is going to be our gold volatility. See, this is not as attractive for selling options because GVZ is so low now. Like, volatility has quieted down a little bit on gold. But again, I think that the reason volatility is quieting down on gold is I think you have a priming situation. What I mean by that is I think you have a decision point coming for gold. And I think we're going to break with some decisive price action one way or the other. And I'm open-minded. Like, if you get this thing breaking higher, I haven't taken a long in gold in several months, but I could be looking for longs. If CPI, however, comes in screeching hot, like if it is a problem and we got rates rising, I could also be looking at the short side. And again, I recognize that some people are like, Nick, that doesn't help me. You're not telling me to buy or sell today. I'm not telling anyone ever what to do with their account, first of all. But second of all, sometimes it's okay to be neutral. I know I keep saying that, but it is actually very okay to look at something and objectively say, I'm going to watch and wait. I'm going to stalk my prey here, right? I don't need to be in a position on gold every single second all the time. But I do know what we're doing here. I'm telling you, if you're hanging out with me, like, a lot of times my stuff gets like a ton of views when I'm short gold, when I'm long gold. Like, I get a lot of attention when I'm doing that. I get a lot less attention in my videos. I'm aware, but I'm, still a trader. Like, I want to trade the best I can. But these are the videos, like these are the live streams where we actually prep for stuff. Like, this is important. Instead of just like, oh, you always have to be long, you always have to be short. You don't. You really don't. You can be sitting on the sidelines and say, I want to be on the right side of this next move. And to do that, sometimes I'm going to wait for a more clear move. Nick, are you in a situationship with gold, mixed signals? Yeah, that is so facts. Yeah, mixed signals. And you know what that means? That means take my hands, sit on them, right? Do nothing. And so I'm just going to wait. And I think, we might get some clarity from, like, on my system. Do you see the mixed signals in front of your eyes? Like, look how much blue and red is simultaneously on this screen. Like, look at this column. There's my problem right there. 4 weeks ago, I was in beautiful shorts, right? Smooth, cutting butter with a warm knife. There's a Southern expression for you. I don't even know if that's Southern, but technically I live in the South, so I'll call it Southern. When all of this is aligned, I have no problem buying every dip or selling every rip, right? But if I have mixed signals here, then what do? Well, I go into analysis mode and I say, all right, what needs to shift? What am I looking for within this map here to get me back in that smooth as butter type situation, right? So if I am looking at 9 bullish, 7 bearish, well said, right? Exactly. Again, look at here, right here, we have this tool. This is super popular. People love this thing. It's a simple little indicator that shows the Edge Finder score over time. In June, we had confirming confirming signals from Edgefinder. We had June into July, right around the start of July, this thing started to bottom out in score, right? When everything is aligned, I have no issue taking every trade, being in the position. But when it goes neutral like this, I have a much harder time making a strong directional bias trade. What I am open to do is taking a non-directional trade through selling options, but I'm not interested in long or short right now. I'm waiting. What am I looking for? I'm looking for either things to confirm and flip bearish or things to confirm and flip bullish. And what we could get is inflation data, right? That's the one that's up next. If you get CPI coming in soft, if this goes bullish, if PPI comes in lower than expected, then I think gold can erupt higher. Like I think gold could have a huge breakout higher if you have cool inflation. I'm not predicting cool inflation. I'm saying if inflation equals cool, then it will factor into Edgefinder's scorecard and it will likely contribute to an overall bullish bias. Does that make sense? Nick, if gold was a woman, would you date her? No, because I'm happily married and I would only marry my wife. Anyways, with gold, that's kind of the summary. Dollar, sort of similar. I've talked about how I feel less confident in being super bullish on the dollar here at the highs, right? I think technicals have given us a bit of an early warning. Like technicals have softened up a little bit. Seasonality in July is historically pretty weak for the dollar. So we could be experiencing a pullback for the time being. Maybe the best thing we can do is just wait for more clarity here. 4-hour trend has flipped a little bit more bearish. And some of our economic metrics have broken ranks from our bullish thesis. That's what threw a wrench into me being like, hey, I'm going to, just keep chasing, buying the dollar, selling gold. Like I'm not going to chase these things off of a bridge, right? I'm going to stick to my system. I listened to something this morning that was phenomenal. I was listening to someone speak about how there's all these different styles of traders. There are momentum traders, contrarian traders, fundamental analysis traders. There are really, they were talking about investing, but it's kind of the same theory. You have people who trade certain asset classes. You have people who invest in dividends, people who invest in momentum, people who invest in growth stocks. So many different disciplines. Here's the thing. You have to stay loyal to your discipline. If you're switching disciplines, if one week you're a gold momentum trader and the next week you're a gold value trader, meaning, from a short-term trading perspective, I think you could have different views like long-term and short-term. But like if you're 1 week you're using a Bollinger Band and 1 week you're using moving averages, you have to stick to your philosophies. There's no one best fit, right? Like there is no moving averages are the best. There's no ICT is the best. There's no support and resistance. Like there is different styles and disciplines of trading. And I think you have to just stick to your discipline. Like I would invite everyone on this lovely Friday morning, spending some time with me, or afternoon, wherever you are in the world. Thank you for being here. What is your discipline? Are you a macro trader? Are you a technical trader? Are you a reversal trader? And embrace your discipline because everything has a strength and a weakness. I think his wife is watching as stern as that answer was. You know what? You know what my biggest flexes are? My parents are one of my biggest flexes. They taught me that you open the door for your lady, right? And do you know how many times I have gotten unbelievable compliments for, like, I go to the restaurant, right? I slide back the chair. Every gentleman here, this is an easy thing to do. And you just look like a Chad, all right? Open the door for her. Pull her chair back for her, put her chair back. Do you know how many times I get compliments like that? Like, I think it more is self-serving than anything at this point. Like, doing that little gesture gets me so much hype from other people. People are like, oh, heck yeah. Oh, like, dude, nice, real nice. And I'm like, at this point, am I even doing it for her? Or am I doing it because it makes me look like a Chad? Guys, like, you can win in life with some little tweaks, man. I'm telling you what, be a gentleman. My limits get tested, however, on trying to be a gentleman with some of the comments that I get, man. I sometimes, here's a little admission. Sometimes I get some crazy ignorant, just like jerk on the internet sending me something, and I type out kind of like a rude response. You know what I do? I do Control A, backspace. I delete that, and then I write something nice. And I'm like, you know what? Karma. That's it. Do the right thing, even when it's hard. Yada yada yada. Your parents did a great job. Thank you. My parents are lovely people. That is the greatest, by the way, it's the greatest advantage you can get in life is good parents, in my opinion. And I certainly am blessed there. Anyways, go see your parents this weekend if you can. Bitcoin up 1.68% here today. Is Bitcoin, like, the thing is with Bitcoin is such an underperformer here recently. Like S&P 500 near all-time highs, Bitcoin still just in the dumps, man. I don't even think, yeah, Bitcoin's just got a neutral reading here. It was bullish maybe late June. It did get a little bit of a bump here, but I'm just hesitant to really sink my teeth in on Bitcoin here. I've not been willing to take any trades there for a while. Chinese stocks are getting kind of an interesting bid. This is interesting to me. Do I want to try and watch Chinese stocks? I'm going to just pull up FXI here really quick. No, I do not like that chart. That chart looks horrible. Horrible. That looks like such a downtrend. But maybe Chinese stocks are in the process of bottoming. They have been such a poor performer over a very long stretch of time. But who knows? Maybe if we get some momentum forming here, I could be interested. Let's see, what else do we have on the list today? New Zealand dollar, a lot of neutral stuff. I think, interestingly, gold is still probably top of mind for me now that it's actually flipping almost to bull territory. However, cautionary tone here with gold. If COT data flips like bearish this week, we're going to get new data for this tonight. If COT data week over week change comes in negative tonight, that could hurt your bull case here a little bit. Like a lot of this bullishness right now, I shouldn't say bullishness, it's still neutral, but a lot of the bullishness due to sentiment readings, that's going to be largely built around crowd sentiment seems bearish right now. Institutions seem to be building bullish positions on gold. Actually, not even seems to, like they just straight up are. Like if we take a look at COT data history, like this is where I'm struggling with the idea of like justifying any shorts, because look, I mean, gold's down 25+% from the highs. Institutions are still very long. I don't love stocks, but gold 30% off starts to get attractive. So I think probably where I will actually end up taking a position this Friday, or maybe Monday, I don't know, is probably selling cash secured puts long term on probably like GDX or GLD, like just selling some out of the money cash secured puts, maybe down like this. I was looking at this the other day, like selling the 68 put or 67 put. These would be gold miners. So I'm open to that idea because I think gold could keep going down, but longer term, I think this looks like a buyable dip. So I've had a lot of fun on the short side. I'm not necessarily abandoning the idea of shorting gold. If next week's CPI is hot, if COT data this week shows some selling, I could very well flip back into bear territory. I'm very, very much in a neutral stance with gold. And I feel like that's the right call for me right now. Nick, have you been watching the Dow any? Yeah, Dow has been interesting. I did two things yesterday, very boring things. You guys want to see two boring position changes that I made yesterday? Boring decision yesterday. Number one is I bought shares of Procter and Gamble. Like, you cannot get more sleepy, boring stock than Procter and Gamble. Okay. They make all the most boring things in the world. Household staple items, paper towels, toilet paper, tissues, like the most boring things in the world. And I like it. Like, I'm literally sitting here. I'm like, do I want to chase semiconductors? No, I really don't. Like, this tech AI stuff makes me nervous. I think it's great stuff, but I would love a discount. If I can't get a discount, what do I want to look at instead? Well, this is why I'm bringing up the Dow Jones, which is the Dow Jones is like full of a lot of boring stocks. Although instead of trading the index, I like the idea of picking out some individual stocks. The other one that I bought is McDonald's. Not a huge position, but McDonald's is a ginormous real estate business, right? They sell burgers, but what they really sell is real estate. The model has been around for a very long time. Here's what I'm really hoping: bring back the dollar menu. Bring back the dollar menu, and the stock can just explode. I was watching a documentary on McDonald's, and historically speaking, the stock, and I apologize for the really boring topic, but this is not boring to me. McDonald's over its history has had many funks like this, where people pull back dramatically from going to McDonald's. People, like, this is one of the most hated companies right now. People hate McDonald's. But part of the reason I'm making this bet, sticking some money in McDonald's, and I could go at length on this, but I don't have any more time. Solid revenue overall. They're buying back shares aggressively. And in times of pressure in the past, they have tightened things up and taken on new management, new strategies, to continue the Goliath of a business that this is. So I bought some shares of McDonald's. It's a boring stock, but it is one that I think has potential to do another turnaround. And I'm not even kidding. The dollar menu, although that is just impossible nowadays with all the inflation we've had in the last 20 years, in the 2010s and the 2000s, I think 2 times before this, McDonald's stock had ginormous drawdown on the stock. It was doing terrible. And they literally brought back discount programs, and it actually really helped the company. I hope that's one of my hopes, is that the management is like, all right, let's find a way to make McDonald's affordable again. Do something to cut costs and make it so that people come back in the door and go order that horrible for you food. Every once in a while, man, a McFlurry, dang, hits. Anyways, guys, up next, we have Alan Perez taking over the stream. Before we throw him on here, let me just remind you guys that if you are interested in Edgefinder or Stockbox for that matter, I know I just briefly talked about 2 stocks that I'm buying. I use the Stockbox, which is our other product, to scan valuations and metrics for stocks. I don't have the time to do so right now, but of course, in the future, or on my other YouTube channel, we'll be talking more about Stockbox. So if you're interested in any of our products, what I'll do here now is I'm going to drop a link in the live stream chat. If you click this link right here, it's just been dropped, you can speak directly to a member of our support team about getting access to our software products for a huge discount right now. Let me also just switch the banner on the screen here for you. If it's easier for you, you can also simply scan the QR code that you see on the screen right now to contact us to lock in that 40% off discount while it lasts. We also offer payment plans, extra discounts for people outside the United States, etc. So if you are interested in our products, now is a chance to do it during our summer sale, which gets you 40% off anything that we have in our store. With that said, up next, we've got Alan Perez taking over the stream to talk more about markets, that he is watching on this lovely Friday. Stay tuned just after this quick break. This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Good morning. Happy Friday, everyone. All that dang McDonald's talk got me hungry. I haven't ate breakfast yet. I will say I had McDonald's yesterday, and they got to bring back that dollar menu, like Nick said, man. It's expensive. My order used to be either a double cheeseburger or a hot and spicy with a fries and a nugget. And now, you got to hit up the deals on the app to achieve that. But yeah, I got to eat some breakfast after this. Ooh, my stomach's growling now. All right, let's talk about markets here. Pretty quiet Friday, I would say. Nothing much going on. Meeting minutes lackluster, I would say. I think the market's really just positioned and quietly waiting for CPI that's coming up next Tuesday. That's going to be the real decision maker. We are expecting, as far as analyst expectations go, for a cooler CPI. Let's see. Oh, that's for Lee. My bad. We do expect a cooler CPI, if I'm not mistaken, predominantly due to the lower prices of oil that we've seen in June. I saw the analyst expectation somewhere. Now I'm not seeing it here on Forex Factory. Let's see. Let's filter this out. Apply settings. Was it Financial Juice that I saw it? Yes, perhaps. Yeah. So CPI, core CPI year over year, looking to tick down to 2.8% from previously 2.9. CPI year over year 3.8% versus previously 4.2. So hopefully for the inflation story there, we can go ahead and dip back into the threes and get out of those 4.2s or those fours there. So what I'm looking at here, very, very simple as far as what I'm looking to do. With the dollar, you kind of are at this inflection point where you have this upward trend line here and also this level of support that was previously very, very strong resistance. This 100.5 level capped advances many times here before. We are now at that level here once again. And the question is going to be, do you get a break below that level, or do you get a break above, or whatever, above this 102? I think CPI is really going to move us across that hurdle and really answer that question for us. So the way I'm kind of waiting for this to happen is if you get that cooler CPI print, then if you get a technical break for this level here, I'm going to continue holding on to my USD CHF shorts. If you get a hot CPI print, then I'm going to be looking to go long the dollar. Now the question becomes, how would I participate in that? Well, I found this out here from a technical level. I really like Kiwi dollar to the short side. Here's why. So over here, price action wise, at this level, this is where Kiwi dollar got surprisingly hawkish. You had a bump in the Kiwi dollar, but ultimately it was faded off. Well, this recent RBNZ meeting was also surprisingly hawkish, but then it got, so I'm expecting a little bit of a fade. So if you get price action tapping into 0.5800, where that 200-day moving average lives there for Kiwi dollar, and you have a strong dollar via a hot CPI print, then I actually like Kiwi dollar to the short side. Now, what would cause me to hesitate on this position would be the edge finder score right now for Kiwi dollar is neutral, so not the best. So the way I'm positioned right now is USD CHF to the short side. We're getting a 9 bearish reading, which gives me that added confluence there. So I'm just going to hold on to that. And if I'm proven wrong via the CPI report, then I just flip my position to Kiwi dollar shorts. I really like that trade. Euro dollar also looks kind of good as well. I'm not in the trade right now, but this is what it would look like hypothetically if I were to put my levels on there. So euro dollar just kind of grinding here, chopping around, not doing much. But if you were to get a break below this level of support here, I would probably execute a trade, have my stop above this structure here. And then my first target would be like 1.13. Then I could move to 1.12, 1.11, so on and so on, depending on the strength of the trend, and other factors that come after the CPI report. But that's kind of what I'm looking at here. For gold, it's been very, very boring here recently. You've been chopping around back and forth, right? And I think it's just because the market's really questioning how hawkish or how dovish are we going to be. So I would wait for a breaker retest in either direction. So if we were to overcome this 4,400 level, break and retest with the cooler CPI print, and if the edge finder tells you that it's bullish, then I think it's pretty wise to go ahead and take this one to the upside here if you have that technical confirmation, especially if you overcome this 200-day moving average. I like that trade a lot. Also, too, if you were to get a break and retest of support on a hot CPI print, maybe we get a stronger dollar, stronger yields, then that story makes a lot of sense, and the gold short story continues to live on. So very, very simple with gold. It's that simple. I'm watching the price of oil, I'm watching yields, and I'm watching the US dollar for some directional clarity on gold. The same thing could be applied to silver, but I just prefer gold in my personal opinion. Another thing that I'm looking at here, I was discussing this with the A1 Trading Workshop here this morning. Lovely call, by the way. So if you guys are in here from the call, good to have you. Dollar CAD, one directional push move up. You had strong US fundamentals, right? You had the weakening NFP report, which that is just one report out of a whole holistic view of a strong US dollar. We had strong growth, strong inflation, and a strong labor market. So there's only one thing out of everything, but you had that weakening NFP print that is now starting to maybe topple over USD CAD. If you were to add in a cooler CPI report, that would only add more fuel to this thing to the downside. Another thing that is worth mentioning here is that you do have Canada, their rate statement and their press conference here. So maybe if you get a world where, and this is a very unique situation, I understand that. If you get a world where you have cooler CPI and a neutral to hawkish Bank of Canada, I think this one to the short side makes a lot of sense, especially if you get a break and retest of what this was previous resistance here turns support. If this turns into resistance once again, I think to the short side and targeting maybe like 1.395 makes a lot of sense. What also works in our favor, which is the edge finder, is now pointing bearish on USD CAD -6. So I really, really like that idea. I just need to wait for, again, the situation of a weakening US dollar and a neutral to hawkish Bank of Canada. If we have those stars aligned, that is a fantastic trade. So I have USD CAD on my radar, I have Kiwi dollar on my radar, and I have USD CHF that I'm in right now. So that's kind of the beauty of this, right? Like when you're using Edge Finder and you're understanding what the macro landscape is, all you have to do is formulate your ideas and just wait for the theme, the macro theme, to align with it, and then you just execute the trade. Gold as well is on my radar too, so we're not going to neglect gold. We have to wait for that technical confirmation in either direction. What else am I looking at? Euro dollar short side, if you get some dollar weakness, could be good as well. Again, a lot of these Forex pairs, the majors, are just lined up at technical levels, waiting for some clarity for a directional push, right? Like if you get a weak US dollar, Aussie dollar here lined up at this level of support and that 200-day moving average, it makes sense to the upside. Vice versa, right? You can break this level of support and break the 200-day moving average. We all know what happens there. Paul Tudor Jones says nothing good ever happens below the 200-day, and maybe you start to see this continue to roll over, right? Pound dollar, it's moving really strong here relative to others too. Let's look at the actual recovery here from the low. So from here to here, you had at 1.313 pips of upside, and with the euro dollar, it's only 141. So if you get a weak US dollar, most likely than not, you see pound dollar rip to the upside, especially if they have GDP coming up here next week as well on Thursday. And if we look at the growth story in the UK, let's go to economic heat maps, UK heat map. You can see here that the pound's doing pretty well. We had solid services, solid retail sales. Manufacturing PMIs was all right. So the last kind of thing that we would need for the growth story to really get the UK firing up here is GDP. So that could be also a contender. But the risk to reward on pound dollar, you would have to wait for a pullback. I really wouldn't chase this thing. Marco, how you doing, man?
Hello. I'm talking to Max here. Max, you're the only guy from France that I like. So usually French people are kind of, I don't know, special, let's say.
I've heard that. And that kind of makes me hesitate on visiting. I've heard that about the UK too, is that they're not the friendliest. But Max is very pleasant. I like Max.
Yeah, Max is great. But I heard the tax in France is crazy. I think at one point it was 70% on corporations, which is, are you making any money after 70%? Like, what the hell was that? So how are you today?
I'm pretty good, man. I'm pretty good. We just had the A1 trading workshop. It was awesome. It was very informative, and I basically just went down the kind of macro environment that we're operating under. You know, the main theme I would say is the U.S. and rates and the whole Iran story now. So just waiting on things to really start lining up for us. I have a couple things on my radar that I'm looking to act on next week. So we have my USD CHF short position that I'm in. I'm looking to maybe play USD CAD next week if the right things align. Kiwi dollar too. I'm waiting for if the right things align. Maybe euro dollar as well. So there's a couple things on my radar.
Yep. So you're looking to mostly buy the US dollar through these positions?
If we were to get a like if I'm wrong on the US dollar short idea, if we get a hot CPI print, then likely than not, one thing that I really like is Kiwi dollar to the short side.
Okay.
So if we remember right here, Marco, we talked about this yesterday, which is like the fade that happened after the hawkish RBNZ.
Yeah.
And the last, not the last meeting, but the one before it, right? We had like a pop and then it ultimately faded. You're getting kind of the same thing here. Like you're getting a pop, but if you also have the potential of fading that along with a strong dollar, then I think that if you tap into this level here where that 200-day moving average lives, I think that's a pretty good short trade. You know, you're kind of just bouncing this one to the downside. So I like that one. If you were to get a strong dollar, I like euro dollar to the short side. That's kind of like a no-brainer one for me. But then I think the real opportunity, something different, would be if you were to get a softer US dollar. At that point, my trade USD CHF will continue to work out. And then, pound dollar, which you're in right now, I would just let that ride. I wouldn't chase it just because it's already moving. But yeah.
Yep. And the big news today is the yen. Did you see that?
No, what happened with the yen?
So let me show you.
I know it's down on the day, but
yeah.
Well, so I know they had a PPI yesterday that came in hotter than expected, right? Something inflation came in hotter.
Yep.
I saw that last night.
But the bigger one was this one from Reuters. So if I click on, now I'm not going to be able to find it. So let's see. Reuters, yen rises, YGBs. Here it is. So Japan signals massive pension shift to domestic assets, sparking rally in yen. So that's basically what happened. Like the big pension funds in Japan have long been investing outside of Japan for a long time. So now there's sort of a pivot where the government, which basically controls these pension funds, is saying, look, guys, you need to bring money back into Japan because we need the yen to appreciate, and we don't want to hike aggressively. So we don't want to hurt the stock market. We don't want to, let's say, do something that is not going to play out well. But what we can do, like the thing that would push the yen higher without hurting the economy too much, would be bringing capital back from outside of Japan and into Japan. So like the pension funds that start basically investing back into Japan, buying the Japanese bonds. So this could be a big pivot. Now the market is reacting very small. I would say this move is very hesitant, only 0.6%. But if this kind of is real and if it continues, the pension funds have billions and trillions of dollars that they can deploy. And if they go buying Japanese bonds, it could be very, very bullish for the yen. So I think the last time they did it was, in 2015. Something happened in 2015. So let's just go back briefly to 2015. Yeah, so I think a similar sort of announcement happened in 2015/16, but I'm not exactly sure. And I think this was the move because of that. This was something with the YGBs, so the Japanese bonds. So this, from my research, could be like a 6-month to a 1-year move on the yen. So like a bullish move on the yen. Now, I did close my position because it provided a good opportunity for me to get out and stop paying those crazy high swaps. But if we get more commitment, I'm going to look for more short setups on, anything yen related. You can do Swiss yen, which is bullish swaps. So you can like sell Swiss yen, collect small bullish swaps, and keep the position going for 2, 3, 4 months, as long as the team needs to sort of play out. So I think this is the next big thing in Forex. I think a lot of people are sleeping on it. And I think the yen could really appreciate if those pension funds commit. And they will commit because the government basically controls them. And the best, most efficient way to make the yen stronger without doing an intervention, without hiking rates aggressively, is to say to the pension funds, bring that capital back.
That makes a lot of sense, and that actually makes me like confident in like yen strength if they do like proceed with that and stuff like that. Like it seems like they're trying to solve the problem by actually solving the problem and not just putting a band-aid on a gunshot wound. Like the intervention will fix it temporarily, but fundamentally, like it's not going to solve the problem. So like it's like forced demand basically, right? Forced buying of the yen, which will definitely help. I mean, you're seeing that with was not working out too well with SpaceX, but especially like the SpaceX going into the Nasdaq, right? People that are invested in the Nasdaq that are tracking those funds are basically getting forced buying into the SpaceX without them being able to opt out of it. So it seems like that play right there could actually help with the yen story. I've also seen Marco. So we had Max brings up a good point. I saw this PPI came in hotter than expected, if I'm not mistaken, in Japan.
Yep.
There was also some forward comments from Katayama that I saw last night that basically says, is Katayama like super hawkish?
Katayama, he is, I'm not sure, but I think he's a little bit hawkish. I know the Takaishi, so the PM and her gang, they're super dovish. But Katayama, he could actually, I know he mentioned the intervention a couple of times. So
I don't know if it was Katayama, but one of them said in the previous press conference that they had, it was not too long ago, maybe 2 weeks ago, maybe max. Someone said that they were open to rate hikes every 6 months. Like that's very hawkish. So I would imagine that's
it is
one person in isolation in the whole group. I don't think everyone thinks that. But again, super hawkish. I saw some comments. I can't find it here, but yesterday also someone pointing towards like raising interest rates in Japan. So I don't know if they're truly dovish or not, like what the net result is, if they're net hawkish or net dovish. But again, like if you were to add that, right, the availability to go ahead and hike interest rates plus that forced demand being integrated by the pension funds, right? I think that would be really, really good for the yen, honestly.
I think so as well. And like people are sleeping on it. The current move is really small. So the current drop in UJ, because as I mentioned, billions, trillions of dollars. I think the pension funds have more than $1 trillion under management that they can basically, well, not deploy all of it, but billions which they can bring back into Japanese bonds, which are absolutely going to have an impact on the price of the yen. As far as the hikes go, well, the pacing of the hikes was very slow and very kind of, I would say, inconsistent. So the hikes really don't seem to have much of an impact on UJ, at least. It's either an intervention or what they are trying right now, which is what we have been talking about, basically.
It's just so hard, man. It's so hard to take this trade, especially when you have swaps against you. Like fundamentally, like
it's
if
not
you
the
just,
UJ trade.
Yeah, man. It's really tough, honestly. And like you could like CHF. This is where I went wrong with earlier in the year. I remember when I took that CHF yen to the downside.
Yep.
I was ultimately wrong because Swiss CN was breaking technically at one point, but the other basket, everything else was not. So unless you see the entire basket start to roll over, I foresee myself having the same problem I experienced with Swiss yen earlier, which is like you kind of jump the gun on Swiss yen, but then ultimately it just gets absolutely reversed because the fundamentals are just, they're still weak on the, like, yes, it sounds good that the pensions are going to start having forced buying, but are they actually doing it yet? And until that happens, until you start to see those flows into the market, it's not going to reflect on the price chart.
Yep. And if you zoom out, if you go to the monthly chart on Swiss yen, that thing never goes down. Almost never goes down. So, I mean, yeah. So this looks like Nasdaq. This looks like Bitcoin. So
this is a 2025 gold.
Basically, so it's tough to sell such a chart. But dollars, it's not a dollar yen trade because the swaps would eat you alive. You would probably, it would work maybe in 2 to 3, 4 months. And by that time, you would be kind of minus 5% just because of swaps. Looking at other currency pairs, Swiss yen is the only one where it makes sense in terms of swaps, if I'm being honest. All of the other stuff just cannot be done. Maybe options. You can do options. So
yeah. Or you
but I
can
think
buy
it's
like a yen
counted
ETF.
into options. Yeah, sorry, what did you say?
Or you can buy like a yen ETF.
You could, absolutely.
You'll still pay for it, but it's less,
Yeah, cheaper option, absolutely. So there's ways around it, but depends on how you can deploy your capital. And if you want to play options, if you want to play ETFs, you usually need to have pretty big capital or you won't get a lot of leverage. And if you're doing prop firms, then forget about it. You're gonna have to do Swiss yen. Yeah, basically.
Yeah, it's a tough one, man. But it's also like if you time it and you catch the move, it's a big move. But again, like I like what Max says here. Buy the dip on meaningful dips, and like 155, 158 is like where I would rather be in that position to the long side. Unless at that point, like you get to this level here and you genuinely have a rate differential between the US and Japan of like 1% or whatever.
Yep.
Where it's like it marginally just does not make sense to carry trade anymore. Then at that point, I would like reevaluate it. And then of course, like being short dollar yen wouldn't be as hurtful. But if the rate differential is still the same, I would wait for just meaningful dips, in my opinion.
Okay. I mean, yeah, absolutely. That's a trade as well. I'm just sad that there's not going to be an intervention. I mean, with this recent move, with them saying to the pension funds, bring capital back, it kind of means we're not going to intervene. We're going to try a new route. So I'm glad I exited my trade. It was a small loss in the end because I paid swaps, but glad I'm out. Glad I'm out of UJ.
Yeah. And it gives you like that mental clarity to like start looking at everything better and stuff. I agree. I mean the big thing that I'm waiting for is CPI next week. Like this week was extremely slow. I literally have the one position and it's still just in the trade. So like there's no I did nothing, right? Or it feels like I did nothing, but I'm waiting for an opportunity next week. So that's kind of in the boat that I'm in.
Yeah, we need a new catalyst. It's been boring this week, at least in Forex. Maybe not in stocks if you're doing stocks, but Forex has been pretty slow. The dollar is going up recently, so it kind of went down and then retraced all the way back. But if you look at the size of the moves, they're pretty slow, and gold just hasn't been doing much. S&P has been pretty flat overall. Bitcoin staying a bit resilient, but okay. Actually, Bitcoin looks starting to look interesting, actually. So maybe Bitcoin wakes up a bit. I don't think so. I think we see 50, 40K before it wakes up, but we need the CPI print. And also, I'm glad that there's no real escalation from the Trumpster and from Iran. So it looks like it was just another taco. Do you think he loads up on his positions after he does a threat? Because the S&P usually drops by a percent.
I don't know. Like, I don't know. I highly doubt that it's him, like
Yeah.
doing the trades. I really doubt it, because if you do the math, like the average is like you're doing hundreds a day.
Yeah,
like this, I think it's impossible for. Yeah, I mean, who knows, man? Maybe he has a bot or something, but I doubt it's really. I think it's just more headlines and it's very attention grabbing. But maybe it's someone on his camp that's controlling things.
Byron.
Maybe his son, the Trump. They have a whole business, so maybe it's through that. But I doubt that the president is on his phone, pulling up his broker, interactive brokers, and entering positions throughout the day.
Oh man,
hundreds throughout the day. I doubt it.
I just installed the desktop app for interactive brokers, and it's absolute shit. So
Really?
it freezes. You can't find assets to trade. You have to restart it. It's super slow. So if you can get the TWS software, I think, and then you can log into your IBKR or use the desktop version. So really bad experience so far with their app. Really, really bad.
I like Webull, how it looks, and I also like Thinkorswim as well. But I think Thinkorswim has been in a decline recently.
Okay. Yeah. I just went with Interactive because the reputation is the best. And if you're in Europe, it's a US broker. And I think Webull, Thinkorswim, I can't create an account as a European. So I have to go with Interactive. But the platform is great. It's just their app is shit.
They also have why I like about interactive brokers. I don't have an account with them, but in the events where like I want to like start trading everything, like you can trade I think Forex, futures, options, like everything in one platform, which usually you have to, like, if you want to trade Forex in the US, you have to go with like your Oandas or your Tasty FX or whatever. If you want to go to stocks, you would go to like Webull or Robinhood or whatever. It's like it's good to have everything under one umbrella if that's your thing.
Yep, absolutely. That's the main thing behind it, because everything is in one place. So yeah, and the fees are kind of high if you compare it to a retail broker. I was at IC Markets before, and the fees with IC Markets, if you have a smaller account, are less than with IB. Essentially, when it makes sense to go with Interactive is when you have 100K or more, I would say, because of the fees. So that's an interesting thing. And the positions are put in quantity, whereas with IC Markets, it's in lots, like in a casino, So it basically shows you how the classic retail Forex brokers have made a casino out of trading currencies, like putting in lots and everything. So it's pretty funny.
Robinhood is like that too, where they try to make it gamified, and they really try to like promote, like they have a lot of like casino executives or pros like went to like Robinhood to design the app and make the psychological kind of effects similarly to kind of like make you start trading, and that, but like that kind of shows you like the intention of the broker, like Robinhood, for example, or like you said, IC Markets, like they're kind of positioned more like towards the retail crowd, trying to make most of the money through fees, versus like your interactive brokers are more tailored to, I mean, they hold positional institutional accounts, like they, they're execution platform for like banks and stuff,
Yep.
But right,
basically the interface tells you a lot. Absolutely.
But I'm gonna go ahead and pivot out here, man. It's been a quiet day.
Sure.
I expect the same on Monday too, leading up into CPI. So nothing crazy going on, but I wish you a great weekend, man. Thank you for the conversation, and we'll see what happens next week.
Thank you as well. This was pretty fun, and let's see what happens on Monday.
All right, man. Take it easy. Bye-bye.
You too. See you. Goodbye. Let's continue. Let's continue with the regular program. Let me run through my watch list first. Actually, sorry, the stock market has opened, so let's run through stocks. I can show you my process quickly. Usually, I go to my ETFs. I see the SPY. It's up. I see the QQQ. It's up. Well, down, but up. Then some individual stuff. So GH, I have a position which is in profit, but red on the day. Dell, red on the day. Any breakouts? Best Buy is breaking out. So this, I may actually take this position. It looks pretty good. Let's check the earnings. 53 days, that's fine. So no. Well, no. Okay, so no other breakouts as far as I can tell. Only one is Best Buy, which looks okay. It's surfing the 10 EMA classic breakout. So this is a very, very simple strategy. You need a 30% move or more on the daily chart. You need a consolidation, and then you need a clear level of resistance, and then you need a breakout out of that level. You can enter on the first 5-minute candle, first 10-minute candle, or first 1-hour candle, whatever you want. I found that a good position for the stop loss is usually on the last day's market close. So if I was to take this after my segment, my stop loss would probably go here, and this would be the trade. So you take like 10 losses, and then you take a winner, which goes to 10-hour or maybe 15-hour. That's the methodology behind it. So your win rate is very, very small, but the reward to risk is very, very high. So you have to get used to taking a lot of small losses. Anyway, let's get back to what you guys actually want to see, because I don't think there's a lot of stock traders here. So if you trade stocks, and I mean individual stocks, just put the word stocks in the chat, just for me to get an idea if anyone is watching that. So stocks, put the word stocks in the chat. I'm interested. As far as my classic watch list goes, USD/JPY, I'm out of this position for a small loss. The swaps did eat into this position, so I think I'm down maybe minus 0.2%. So I risked 1%, and I'm down minus 0.2%, which is fine. It's okay. I'm gonna bring this back down below. Actually, no, let's put it back because I need to film a recap. GU is still running. So GU still looks fine and very strong. I have trailed the stop loss, 1.32927. This was a signal in the A1 Discord. So if you want to join the A1 Discord, get all of my positions, definitely click the link in the description. You can use the code Marco to get 25% off. So if you want to trade with me, get all of my trades, work with me, chat. There's a bunch of other successful traders in there, Max, Sluggy, Ballout. So, and all of the guys, I don't know your names on top of my head, but there's a lot of really good traders in there. So GPUSD, yeah, I'm just going to trail the stop loss. That's the plan for now, trailing the stop loss. Personally, I'm betting that the CPI prints cooler than expected. If we go to the calendar, let's see if that has populated. Next week, no, still hasn't. So the forecast has still not been put in. I'm looking at this one the most. So the CPI year on year, 4.2. I think it goes below 4. I think we could go below 4. So that should be bearish for the US dollar. Could make the Fed, or could enable the Fed to pivot to dovish, and this position would definitely benefit from that. Euro GBP just keeps on melting lower. The British pound seems to be a very, very strong currency. So this looks pretty good, this waterfall, this meltdown. I would like to get a pullback to the 20 EMA and then consider getting in on a sell position, because this is really moving nicely. I'm not exactly sure why. It could be because of the new political situation that Comrade Kier has stepped down. So probably the market likes the new guy, or the potential new guy, which could continue. And the first major level of support is right here. So we have some room up until that level of support. But I don't want to sell here. I would like to get a pullback to the 20. And also, absolutely, I would like to get a bearish print on the edge finder, which right now it's pretty close. It's -4, so we need -5 or lower. And I have the Nikkei. I still have the Nikkei. If you're wondering how the whole situation with the yen, the situation that we talked about 15 minutes ago, the pensions shifting to domestic assets and removing capital out of foreign assets, so going out of the US back into Japan, that should be a little bit bearish for the yen, for the Nikkei, because the yen appreciates and the Nikkei is quoted in basically the yen, right? The yen and the Nikkei are connected the same way that the US dollar and the S&P are connected. When the dollar gains value, S&P usually loses a bit of value. But it also may be interpreted as bullish because capital is flowing back into Japan. Some of that capital may flow into stocks. I'm not sure, but it absolutely could happen. So it may even be bullish. I still like the Nikkei as far as the whole situation with the dovish government. I still like the trend line that is going through this right there. I still like the 20 MA. I'm just waiting for one last thing, which is a bullish print on the edge finder. So for this to turn bullish, and then it's going to be game on to take a stab long. I like that it's waiting for me here. So hopefully it doesn't fly away without me, but I'm not going to go in without this print. I'm going to have to wait for a bullish print. I also want to mention the sponsor of today's video, which is Ola Prime. So if you guys are looking to get funded, expand your trading capital, definitely do consider Ola Prime. Ola Prime, because we have a 35% discount code for you, and it's A1 Live. So Ola Prime, 35% off, A1 Live. They have a really good Trustpilot. Do read some of the reviews. They have a score of 4.5, which is pretty high in this niche. They don't have a consistency rule on some of their account types, which is a deal sort of breaker on other prop firms. If you're a swing trader, the consistency rule is really, really bad. So Ola Prime doesn't have it on some account types. And if you compare it to FTMO, which is the OG of the game, this is a much better price. So with our code, of course. Without the code, it is a bit cheaper, but with the code, it's a no-brainer. So 35% off. Link is in the description. Check it out if you want. And let's continue with the regular program. So that's it for the watch list. Let's actually put UJ here. Yeah, let it sit there. Only 3 things going into the next week. As I mentioned with Alan, the market is a bit slow, a little bit boring. We're waiting for a new catalyst. The catalyst could be the CPI print. So I'm going to wait for that. I wouldn't force trades today. I would probably not do any trading on Monday, if I'm being honest, into that CPI. I would wait for the CPI print. This Fed Chairman Warsh testifying, I don't know, that'll be pretty important, but the PPI will. So the CPI and the PPI, biggest things next week. I'm expecting inflation in the US to start coming down. Oil is back to pre-war levels. Energy prices are back to pre-war levels, or they should be back soon. Middle East is kind of behind us, and inflation should naturally fall lower. If we go to economic data, inflation CPI for the US, it's at 4.2% at the moment, and it seems to be rising. So if there's a pivot, if it starts naturally falling without the Fed interfering, then there's no need for hikes. There's no need for the Fed to be hawkish. What could happen is they can pivot to being dovish. And that would really, really be good for my positioning. I think GU would fly. I would probably try to add more size, selling the dollar, right? Maybe I can get in to UJ once again if I get more confirmation. So that's the general story at the moment. I have run out of time. Do not go anywhere because we have James coming on in 30 seconds. I wish you guys to have a great weekend. Do not overtrade until that's, do not overtrade ever, but don't force trades before the CPI print. Okay, that's crucial. That's my best advice going into this week and then into Monday. And I will see you next week. I'm streaming pretty much every single day. So thank you and goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
Apologies, just realized my mic was muted. Happy Friday, ladies and gentlemen. Hope everyone's well. Hope you all had a good week. Yeah, no, as I was saying, my week's not been fantastic. Nothing too bad, but definitely not as good as I would have liked. Don't worry, I know you guys have got a bit of a delay. I've already seen it was muted, but I appreciate the heads up. So gold, not doing much. However, I was stopped at break even. So this trade is still open for my team, but yeah, nothing for me. Absolutely disappointing. So my Nikkei trade was stopped. Gold was stopped. What else was I in? Euro Swiss, we closed at break even. Just a very lackluster week. Really uneventful, really uninteresting. I am in, actually, I forgot to mark it up. Hold on. I am in a Dow position here, just a very, very small long position, just to see if we can continue some momentum to the upside. But that's all I've got open. There's really nothing interesting to talk about from my side, so I'll keep that short and sweet. Even the watch list is still very bare. Actually, I need to put that green. Yeah, the watch list is very bare. So as we were discussing yesterday, there's really not much that I'm paying attention to. So CAD yen, Pound Aussie, Swiss franc, China 50, Swiss yen, Euro CAD. Hold on, sorry, I was reading a message. Euro CAD, dollar CAD, and dollar Swiss. I know we were looking at, I think it was dollar CAD yesterday, wasn't it? Let's see. Yeah, it was dollar CAD we were paying attention to. The problem is with the dollar, I'm not sure if I want to be a buyer. Oh, Sluggy, sorry, I forgot to say hello to you back. So yeah, with the dollar, do you want to be a buyer or do you want to be a seller? I think it's a very tricky position to take at the moment because, you know, we had a very obvious time where the dollar was really bullish, fundamentals were there, the markets were pricing in hikes by the Fed, and it seemed very straightforward, but it's not really the same dynamic anymore. So if we go to the economic heat maps, we look at the US. Simo, hello, good to see you. The dollar's dropped down to 60. This used to be 100, well, actually probably 2 weeks ago now. So we're getting a little bit outdated, but still, this was at 100. It was a very simple sort of landscape. Now that's dropped down. The Fed doesn't seem as hawkish as it was. So there is that argument. The dollar is getting a little bit of war premium as well on the back of the Middle East situation. Something that I suppose is quite positive is we found some pretty simple, nice support here around the previous high towards 100.5, which I quite like, or 100.6 actually, I suppose is quite closer. And this is a pretty decent fib retracement from the previous low. So from a technical side, the dollar does still look quite bullish. But again, it's a little bit of a tricky one because I don't really want to get behind going long on the dollar, but I also don't really like going short. So I'm kind of just on the sidelines, just waiting for something to happen. So that brings us back to dollar CAD. Yesterday, we were looking at going short because, again, we do have dollar CAD reading bearish on the edge finder. And I was saying that Credit Agricole and I think one other, maybe another bank, I can't remember off the top of my head, was also going short dollar CAD on sort of a mean reversion fair value approach. So there is that type of dynamic we could potentially pay attention to. But the problem is, again, as we were saying yesterday, is even if we did go short dollar CAD, we'd be trading against the trend on the daily time frame, the H4 time frame, we'd be trading against the US dollar. So it doesn't seem ideal to me, really. I think the best outcome would be to see the dollar begin to break down, dollar CAD cross below the 200 moving average. Then we wait for the pullback, and then we look to enter on a pullback and rejection, looking for a continuation lower. I don't know if that's going to happen, though. I'm not very optimistic, which is another reason I'm not in it. I just don't have much faith that dollar CAD is going to suddenly just turn bearish. Simo, you're on the sidelines as well. Yeah, I think we're in a very flat period, which is okay. I don't mind being in flat periods as long as it's not for too long. The downside, obviously, is it's very boring, and you're pretty much sat on cash. So yeah, uneventful, but I think it allows you some peace of mind, I suppose. Sometimes cash is the best position you can have. So back to the Edge Finder, CAD Yen. Someone was talking to me about CAD Yen, or shared a chart of CAD Yen with me this morning. Was it CAD Yen or Swiss Yen? Which one was it? I'm actually not sure. It was one of the two, but the setup didn't look too bad. I think it was CAD Yen. I think they were looking at some sort of fib retracement like this, the rejection to the downside and the bullish engulfing candle. It did look quite nice at the time. I'm still cautious on the yen. And again, cautious on the dollar, cautious on the yen, just very boring. So with the yen, I don't want to get involved because it seems a bit scary, to be honest. The whole idea that dollar yen is continuing to the upside is uncomfortable for Japan, for dollar yen to be at the price it is, and obviously higher from here. So the higher dollar yen goes, obviously I'm missing out on the upside by being quite hesitant and cautious. But it really wouldn't surprise me if we do get some sort of aggressive downside. Whether that will happen or even when it will happen, I don't know. Could not tell you. But because of that uncertainty I've got, I don't want to place any trades. I'm not going to put money on the line for something I'm not confident or happy to do. Does that make sense? Euro CAD shorts. Is that? I think that's on the Edge Finder, isn't it? Yeah, it is. So we've got a -5. I'm not in this position, which is nice. So, oh yeah, I remember we were looking at Euro CAD actually a couple of days ago, which is where that markup came from. We were talking about just following the trend to the upside in the H4. I think from a trend following perspective, long positions do still look attractive. However, obviously fundamentals are now bearish on the Edge Finder. So realistically, I can't do anything here because I've got two conflicting things. Technicals tell me to buy, fundamentals tell me to sell. So I'll always go with the fundamentals. I'm not going to buy just because the technicals look good. I would need to see the moving averages cross over. I'd need to see a new low get printed, clear out the previous lows, then a lower high, probably pull back towards the moving averages, then that rejection, and look for that continuation to the downside. So let's say hypothetically, EuroCAD clears these lows, creates a new low, uses this as support, rejection into the fib zone, and then continuation. Of course, that's in like a perfect world, but I think that's really all I can think of to sort of mark up on EuroCAD right now. Before the event, since we rejected quite okay on golden zone and CAD was expecting bad data. Yeah. Oh, Christoph, it was CAD yen. Okay, so it was CAD yen. I'm not even sure if I replied to your message, Christoph, but I did see it, Christoph. I'm sorry about that. I've been really busy today. Anyway, what were we talking about? I don't think we were actually on a topic. So China 50, I hate China 50. I've tried to trade China 50 a couple of times over the past 12 months or so. and it just never does anything. You know, it's one of those markets where it does move, obviously, but whenever I get in, it just so happens to not do anything. So I'm not even going to bother. It's one of those markets where I just don't think it's for me. I just don't think it's something that works for me. So I'm going to stay away from that one. So that leaves me with very limited choices. Pound yen, I think, again, we discussed this yesterday, but it's really annoyed me because, you know, I was looking at the rejection of this previous high, but as I said yesterday, I was very cautious that this was actually more of an intervention move and we were going to head lower at the time. In hindsight, that was obviously the wrong thinking, should have been a buyer. And that has led me to miss a fantastic opportunity to the upside. So it's thank God it's Friday, because honestly, I'd be getting a little bit of FOMO if it wasn't Friday. As I was saying, I'm still cautious on the yen. So by no means I'm going to actually start buying right now. But I do think that being a buyer is still valid on a bit of a deeper retracement. So maybe if we draw a fib from this low to the high, we could look for an entry around, basically the same setup actually. So revisit the previous high around here, catch up with the moving average, or allow the moving averages to catch up with price, and then look for maybe a 1 to 2 or even a 1 to 1. Again, because I'm cautious on the yen, I'm not looking for massive trades. I'll be very happy to just get in and out, take a 1 to 1, maybe a 1 to 1.5 if necessary, depending on how it develops. Hi, me too. What do you mean? You two on Euro CAD or pound yen? Oh, Simon, you confused me as well. So you didn't buy. You were talking about Sluggy's entry. Okay, fine. So yeah, pound yen, I wouldn't mind buying actually, but probably next week. I don't think I'm not interested in placing any more positions this week. Obviously, the markets are going to be closing in a few hours anyway. My thoughts on Aussie CAD. I actually think the Australian dollar is quite supported at the moment, but I don't really have anything specifically. Let me just do a quick checkup on Australia. AUD added modest gains on risk sentiment, but the currency faces structural headwinds as the Fed expected easing will compress the rate differential that drove H1 strength, while the RBA holds at 4.35. Positioning has normalized out of oversold territory. Yeah, there's really not much to drive the Australian dollar, to be honest. I think COT positioning on leveraged funds is decent, but yeah, let's take a look at the edge finder and see what's going on here. So I don't think there's much going on for the RBA is actually what I was trying to get at there. We had the 3 hikes earlier in the year, then they held, and I think we're pretty much just on a pretty neutral perspective at the moment. As for Canada, I really don't like the fundamentals for Canada. I think we covered this yesterday, actually, so I don't want to repeat myself too much, but I don't think Canada is in a position where the actual fundamental data that we see on the Edge Finder or trading economics or, the hard data, I don't think that's really that bad. But I think Canada's in a very similar position as the UK, where cost of living is extremely high. Average people day by day are worse and worse and worse. And that type of thing often leads to a longer term deterioration in the currency. So I'm not really wanting to buy the Canadian dollar. I'd rather be short on it. And I think, actually, let me just double check. I've not really been on the charts today, but yeah, I mean, oil's coming lower as well. So I think actually I would rather lean slightly more bullish on Australian dollar CAD rather than going short. So yeah, I would lean more bullish. However, let me just check the timeframes here. The weekly is extremely bullish, but it seems to have lost momentum over the past couple of weeks. The daily is pretty nice and bullish, but again, we are stuck in this sideways range. And the same thing for the H4. So we've kind of come out of this bullish trend that we did have, and now we're more just sat sideways. So technically speaking, I suppose buys are slightly more supported, but I think it's precarious. I'm just thinking, how would I want to get into a trade like this? So I think actually, I've just noticed we've got this pretty nice resistance level coming into play, sort of double top. So if I was to be, or if I wanted to be a buyer here, I think that's probably a bit too low, maybe something like this. I'm thinking out loud, by the way. I've not checked the Australian dollar CAD, so this is kind of the analysis process I go through. So yeah, draw the fib from the sort of previous weekly low, daily high, weekly low to weekly high, pull back into previous levels of resistance, retest it into the fib zone, and then continuation to the upside. That was also provide a little bit of a mean reversion towards the moving averages. So yeah, I quite like this, but of course, again, this is a weekly time frame. Will we get this sort of pullback without the fundamental data actually turning bearish? Maybe not. So I think it's a little bit of a long shot to look for this, but again, I don't really mind it. However, if we were to sort of scroll down, we could sort of minimize that idea a little bit or shorten it to the daily low to the daily highs. It would look, I suppose, a bit more like this. So I think there are ways into the market, into the Australian dollar CAD, but I just don't think it's the most simple approach by any means. Too early to say anything. Flat, yep. Short-term CAD could catch a bid. Why not? Again, it's not a case, and it's a little bit difficult for me to say exactly the full thesis, because it's not a case of, oh, we look at this data and that's why. It's more a case of structural problems within Canada and the UK. And I'm not as educated or as informed on Canada as I am in the UK. I get a lot of my information from Canada from one of my mentees who's Canadian. We often have a little chat about how bad both our economies are. And the parallels between Canada and the UK seem very, very strong. So that's kind of where my bias is coming from. I think unemployment is becoming a real problem. Again, it's not really the hard data of unemployment. It's more mass youth unemployment. In the UK, for example, where I think now over 16% of people between 16 and 24 are unemployed. So that's, from memory, about 1.5 to 2 million. In fact, it might be slightly less, give or take. But we're in the millions of young people now that have no work, not in work, not in education, no apprenticeships, no internships. They've got nothing. And it's not getting better. That whole situation is getting worse and worse and worse. So that's kind of the starting point. There is a lot more, for example, foreign capital investments fleeing. We've got talks of wealth taxes that are going to be absolutely detrimental to the economy. We've got so many other problems, massive taxes, national insurance, crazy stuff. But again, they're not just hard data prints I can just show you. So it would require more of like an actual deep dive that maybe I'll do on my channel at some point. But anyway, we'll move on, because I don't want to harp on the same thing every week. I know we talk about the UK and how my disdain for it all the time. Anyway, let me just see how long I've got left here. Hold on. Okay, so 9:45, so it's 10:15. Okay, so I've got roughly 10 minutes left, give or take, and I've got Tiger coming to take over the show. So if there are any specific chart requests, let me know, because I've got nothing to go over specifically. So I'm happy to sit and ramble or go over whatever you guys want to go over. AI will make it worse. That is another fantastic point. Yes, I think, although actually, I think we have kind of gone through a little bit of an issue with AI. From my point of view, we had, the start of AI, the optimism and the hype just increased and increased and increased. And at sort of this point, we had a lot of companies laying off employees, hiring, AI chatbots, AI support, AI, the sort of more rudimentary jobs were getting taken up by AI. But then if you look at, not every company, of course, but if you look at a lot of companies that did employ AI en masse, they very quickly found out that AI is actually pretty bad at doing very specific jobs, or more broad jobs, actually, I think is the way of saying that. So I think we're now in this problem where AI actually isn't as great as what people initially thought, but I think we're now back on our way up. So if you guys have used Fable 5 with Claude, it's really good. And I think we're now going to be on a position, or in a position really, where AI is just going to get better and better, and actually then companies will start using it more and more, and then we're going to have basically a repeat of this problem, but even worse. That's just from my perspective. I could be completely wrong. So we'll see. The Dow, yes. So as I said, I did take a long position on the Dow. It's really not doing too much, but it's more of a short, a low risk, little speculative position. So if it doesn't work, it's cool. But yeah, it's basically just trend following. I don't think there's really a huge deal to it. There's no edge finder reading for the Dow. So let's just check the edge finder. But yeah, my main reason was, again, first of all, the trend following idea, but also the fact that the Fed isn't as hawkish as the markets were pricing at one point. So I think there is a little bit of a tailwind behind the Dow. We've got a score of 3, which I think is pretty decent. You know, again, I don't really trade anything less or anything outside of a 6 above or below 6, you know, -6 and below. So 3 doesn't impact the position, in my opinion, but it is a slight lean. You know, we've got technicals bullish, got institutional position bullish, and the labor market bullish as well. However, inflation and economic growth are bearish. So excuse me, 2 out of the 3 pillars I like to look at, not very supportive at all. AI inflation. How do you mean AI inflation? Do you mean just the mass use of AI, or do you mean actual inflation driven by AI? Might see gold bulls next week. Yeah, it's funny. I've made a few videos about gold. You know, I think I've made 3 or 4 different videos. I think 2 of them are bearish and 2 of them are bullish. I think I did a video on my longer term idea on sort of the weekly time frame, and then I also did videos on the short position I'm in. And then yesterday I saw Nick posted a video about gold longs, and someone commented about flip-flops, like, you know, flipping and flopping between your trade ideas. And that it's kind of just the landscape we're in. It's a very difficult time to be specifically a gold trader, I think, because yes, while I do think long positions are something worth considering if you have the bankroll to do it for longer, or to hold positions for longer on gold, and you can withstand a little bit of short-term downside, it's a good idea. But I think it's still a bit of a tricky environment. You know, that we've still got the situation with Iran that is a little bit of a drag. It's definitely not as bad as it was on gold, but it's still there. We do still have dollar strength. So yeah, I mean, what do you want to do on gold? I think, again, we've got the shorter term timeframes that are bearish, but then, you know, we could go the other way. We could look at the higher timeframes, which is what I've been doing, partially, you know, keeping both ideas in mind, where the weekly timeframe actually looks pretty good to be a buy. You know, it looks like a reasonable pullback. The RSI was oversold. This looks healthy to me. So again, I think it's worth keeping in mind both approaches, so that way you're ready to flip and pull the trigger whenever your catalyst comes, whenever the time happens, for whatever reason you want to get in. But for now, I think staying on a short bias makes more sense. Short term, of course. Long term, I've got no doubt that gold will reach new all-time highs. You know, maybe 6 months, a year, 2 years, 5 years, who knows? But yeah, I'm by no means one of those people that says gold's going to 0 or 2,500 or anything like that. Hold on, I've missed some messages here. I'm still bullish on the dollar, currently in H4 USD CHF, longs 2 and NQ longs, still buying the dip. Daily entry, the DXY still responding positively. Yeah, that's the same fib I'm looking at. I like that one. I think it is definitely getting respected. So I understand the long thesis there. Wash testimony on Tuesday. Indeed, it will be interesting. We haven't got any OCR forecast for CPI. It's a flip, the coin situation. Yes, Simon, I completely agree. I presume the dollar might stay bullish till CPI. Yeah, CPI will be a big event actually for the dollar. It'll be quite telling on. Yeah, it'll be quite impactful on how the markets perceive the Fed to move forwards. You know, again, we did get the weaker labor data come out, so if we go back to the US economic heat map, we can see ADP and NFP underperformed. NFP missed by about 50%. We had PMIs, so manufacturing and services PMI, come down slightly, not terribly. They're definitely not drastic prints, but they did come out cooler than forecast. So if we also take into account the fact that inflation has been quite sticky, if inflation starts to cool as well, I think we could see a quite significant repricing in the dollar. When I say significant, I don't mean the dollar's going to crash, obviously, but I think we could. That would be quite a good catalyst for dollar bears to step in. However, if it remains sticky or actually heats up, then I think dollar bulls will be paid quite nicely. Could surprise the upside NFP miss due to non-participation, maybe. We'll see. Yeah, we'll see. I say it quite often, but I don't like to sit here and say I think CPI is going to go higher or CPI is going to go lower. I don't think that's really beneficial. I like to Well, somewhat. It depends, because sometimes, and this might not make sense to some people, sometimes I like to take longer term perspectives where I do look more at the trying to forecast these things, like in the UK, I suppose, is a good example, when I'm doing more of a longer term thesis on something. But if it's just day-to-day swings, like euro dollar or gold or something like that, it's more a case, oh, it's bearish on the edge finder, maybe some sort of central bank confluence. Cool, it's valid. I'm not really someone, again, unless it's a very specific long-term thesis I'm building, I'm not going to sit here and try and forecast news events, because generally it's not that helpful. And normally retail traders like us can't do any better than what Forex Factory will say anyway. So we'll see. We're not speculators. Well, we are, but we're not economists. And I think that's the key difference, really. When again, I say this quite often as well, but as retail traders, we need to know where to draw the line between analysis and actually trading. It's very easy to get more in, if you enjoy analysis and you are a fundamental trader, it's really easy to get into the more academic level of economics, the type of stuff you'd learn at sort of university or as an actual analyst. And for the most part, a lot of that stuff actually isn't very useful for what we do, which is more longer term, longer term sort of swing trading, because the sort of microeconomics isn't overly drastic, again, unless you're trying to build models and forecast things, which again isn't something that I care to do. So anyway, I'm kind of just yapping at this point. So again, if any actual requests on charts, let me know. So we've got about 3 minutes until Tiger is coming to take over the show. Until then, we could take a look at some of the indices markets, some of the some of the indices markets. So US 500 is making its way to the upside. However, we are still in this pretty nasty range. So for me to really get into more of a bullish perspective on these markets, specifically the S&P, I would need to see these highs get cleared out. So I need to see a new high get printed, pull back into some sort of resistance, whether it's this previous high here, the previous all-time high, around 7,600, then some sort of rejections continue higher. That would be a fantastic momentum, even just basic trend following type of trade. Again, if we actually get, I keep saying again, if we get CPI coming out cooler, we might actually see the S&P flip bullish on the edge finder. So that could be, again, a really fantastic long position to take if we do see those things start to line up for us. Nasdaq's really not doing anything, actually. It's really underperforming the S&P in terms of sort of the price action it's making. And the Dow actually is heading to the downside a little bit after the New York Open today. DAX is sideways. I wasn't looking to buy the DAX, but we were discussing potentially being buyers yesterday. Basically just have bounced off the 200 moving average and the RSI becoming oversold, and just talking about sort of a trend following type of trade. It's not proving successful. So I'm not in the position, by the way, for full clarity on that. So I'm going to scrap that because there's no follow through. Doesn't really show much momentum behind there at all. Oil is continuing to sort of move lower. It seems like the market's completely disregarded the escalations we've had in the Middle East, which is interesting to see. But again, I don't think it's anything I can really trade off. So fun times. We got to play both sides of analyst, money manager. Yeah, absolutely sluggy. That is completely right. Fundamentally speaking, I think inflation could be the catalyst to behind UJ bearishness next week if we ever get the intervention. Maybe. Yeah, that is a decent theory. I don't mind that. It definitely could be. We'll see. I mean, the difficulty is, I was looking for interventions back at 160.5, ish, sort of this zone around here. It never happened. I was then looking again, sort of around here when we were seeing the slowdown in momentum. I didn't take any trades here, I don't think. I can't remember if I did or not, actually. But that didn't happen either. And then, we got this massive bearish move. So I think the difficulty is trying to just not get chopped up, trying to trade that idea. But anyway, ladies and gentlemen, it's my time to end the stream. Well, not end the stream, sorry. It's the end of my segment, I should say. So we've got Tiger coming to take over the show. Guys, enjoy your weekends. Enjoy the rest of your days. I'll see you all next week. Stay safe. Don't get margin called. And thank you for being here.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Friday. Great day by default, as always. Weekend's right around the corner. Yeah, let's do this thing. So tell me, guys, what you're thinking out there. If you have any specific tickers you're looking at. Canada employment data, that was about all we had today. So really the next stop is Tuesday when we start getting some inflation numbers for the U.S. here. And then I think it's PPI, I think the next day. Take a look at that real quick. Canada, they've obviously had quite the sticky inflation number over the last year and a half plus. So it is nice to see a little bit of improvement on that front, get away from all the sixes. Now we're down to 6.5%, which I do believe. I was just looking at the data over here on the Edge Finder earlier, and I think that's the lowest, or tied for the lowest that it's been for a while. So unemployment rate, yeah. So obviously it still has to update, but it was at 6.5% a couple times over the last year and a half. So it's nice to see them coming back a little bit after being as high as about 7.1%. My goodness, back in autumn, this past autumn. So, but yeah, that's basically what we got for the day. Canada did show a little bit of strength in that first minute, and then it kind of died off. We'll take a look at Canada again here in a minute, but yeah, I mean, I'm really waiting for the CPI data, guys, to come out next week. And Kevin Warsh looks like he's going to flap his lips as well on Tuesday, Governor Bailey. And then the next day we do have, the PPI data for the states. So again, like I mentioned yesterday, I'm waiting for those numbers to come out to see if they come out bearish by some chance. And if they do, hey, we might see some bullish gold coming up onto the top setups, possibly. But we still have to wait, see what the data tells us. Because gold, as of right now, I do believe is a +4. Did I just see that earlier? Yeah, +4. So it's just lacking in the eco department, guys. Sentiment looks good. Technicals look good. We just need some help. So what does that mean? We need some bearish U.S. data to get gold back on the list. So we'll see how that all pans out. That's just kind of how I'm projecting or planning out. You know, again, just like shooting pool, trying to look 2, 3, 4 balls ahead for the next play. So that's what I'm looking at. And then the last piece on gold, because I know that's everybody's favorite on the channel. It seems like looking at the chart itself, the technicals, and what I need to see. Like I mentioned yesterday, guys, I need to see this green projection line come into fruition. I really want to see that structure right here being broken and closed ahead of first. The rest of that supply zone that originally was a possible place to short. In fact, I need to delete that alert altogether and get that off my list because I'm not interested in shorting that thing at the moment. But anyway, I just wanted to lead off with that just as a reminder, a refresher of what I'm personally looking at for possible play going into next week. So nothing I can do today, sitting on my hands in that aspect. And I do believe silver is still a -1, so it's even more neutral than gold is. So that right there is your metals as far as your gold and your silver. I'm going to go ahead and delete that alert there on silver as well, because that's old news since it's neutral now. But yeah, that's gold, silver. So if you guys have any other thoughts or questions on gold, hop it in the chat there, and we can cuss and discuss it together. But other than that, did want to touch on oil again real quick. And by the way, guys, I set my alarm today. So did you guys even realize yesterday, instead of 30 minutes, I spoke for 45 minutes? I didn't even notice. I didn't even pay attention. The day before, I started at the half hour. And so I started on the 45-minute mark yesterday and thought I had to end on the 30. So I get to flapping my lips. I don't know how to shut up. And then I take too much of James' time. So James, I do apologize. I know you're out there producing for us. We appreciate your work that you do. But anyway, I forgot to set my alarm yesterday. Today it's set. So you guys won't have to listen to me after about another 20 minutes or so. But anyway, there's a task for that, says Kevin Walsh. That's what he said at his rate statement the other day. And they got released all the names for those 5 task forces that he mentioned, guys. So I don't know if you guys know any of the names. I kind of do some work over here at FX Empire, and I actually posted the list of names that are part of these 5 different task forces. So I don't really personally know a whole lot of them. I've heard of 1 or 2 of them, but it seems like the one getting all the attention right now is this Mark Andreessen guy, co-founder, general partner, Andreessen Horowitz. So I don't know if there's a little bit of the controversy with him being on the board or what, but his name has been floated out quite a bit. He's on the productivity and job side of things, along with the Xbox CEO. How about that? Xbox CEO, Microsoft Corp as well. But anyway, guys, that's the list of names. If you guys want to dig a little deeper, that's there. Again, it's on the FX Empire X page. That's where I do some of my content as well. I do a live stream as well. But and I think you could probably find it on the Federal Reserve site as well. So I just thought that was interesting because we've all been wondering who the hell is going to be on these, task force. So those are the names if you want to dig deeper into those. Anyway, as far as top setups goes, let's go back on over here. We went through gold. We went through, I'll go through oil again here in a second, but CAD yen still at the top of the list there. Dollar CAD continues to be the only dollar-based asset on the list. So let's take a look at that. We'll take a look at Euro CAD since we've gotten down to slim pickings right now, guys. Only 2 items on the bearish list. So dollar CAD, Euro CAD, and then, CAD yen for sure. We'll take a look at all these, unless you guys pop any new tickers in there you'd like me to bump to the top of the list. Let's go on at it. Dollar CAD, as a refresher, it's bounced into that daily supply zone, guys. When we take a step back from a 30,000-foot view on a daily chart, just remember this thing is in quite strong uptrend, and we really haven't broken any major structures to the downside. I would really say, and I kind of already drew this up, to make me ultimately feel comfortable about taking somewhat of a risky, I don't want to say risky, but, a little bit of a counter trend trade. Okay. That's partly why I'm not just jumping in right now to short this thing. The daily supply zone definitely helps this equation, though, in my opinion. Okay, we already kind of talked about that zone a couple of times the last few days. It's a basing structure with 3 big red candles coming out of it. Pretty decent volume on the way out that broke structure. So that's that yellow box up here that I drew for the daily. So that's currently, again, where we're chewing into, and we're literally back to the proximal line of that zone, right, as we speak. Just about ready to possibly peak out. Ultimately, what I want to see is this red projection candle. I want to see a break and close below this daily demand right here before considering a retracement back up. And I'll just go back to a 1 chart view for you guys. Look at it on a 4 hour. So this is that same daily I just talked about. I'm looking for a break and close below and then a possible retracement up into a supply zone that really hasn't even been created yet. Okay. So that's what I'm looking for. We have a brand new impulse leg. Yeah, we do officially have a brand new impulse leg because of this candle right here that closed. That red candle broke this structure. I told you guys yesterday, we already broke 1 set of structures. I would really feel more comfortable if we broke a second structure, and that's what we finally did on the most recent 4 hour candle that closed. Right here. Broken structure, closed below it. That turns this into an impulse leg, although I got to redraw it just to make it a little more accurate at this point. There you go. So that's our new bearish impulse leg. We're talking about that series of candles that touched that highlight mark right there. In fact, let me get the daily out of the way so we can see it a little clearer, since we already know we're in the daily supply. That's what I'm watching. So now that we've got a close, a very aggressive play would be to find a zone up here, but I really don't like the separation with any of these candles up here. You can see our biggest volume candle was this red one right here, but there's really nothing. And it looks like we may have already retraced and touched something up there. So we'll have to dig down to a smaller time frame. Okay, that's a 2 hour, so I don't see anything. That's a 1 hour, so I don't see anything there. What about 30 minute? 30 minute. All right, so now I see what we got. So on a 30-minute time frame, guys, we bounced into this 30-minute candle right here. This was a 30-minute supply going down to the smaller, noisier time frames. Okay. You had some red candles come out, and we finally broke structure down here. So that ended up being a 30-minute supply, and that's partially where we got this bounce to the downside. But that's, again, guys, that to me, that's very, very aggressive, especially when we haven't broken any major structures below yet, that daily demand I pointed out. But hey, just goes to show, as noisy as it gets on these smaller time frames, sometimes these zones work like a champ. Okay, so that move's already been made. And again, for me personally, I am waiting on the break and close below the daily. We do that, then that'll make it a lot more appealing to wait for a retracement. Okay, remember, you get breakout buyers just because we passed through a zone, but that's where the liquidity starts getting sucked up by the banks, the institutions, price back up to get a cheap, or in this case, a better premium price, a higher price for a possible short. So I don't know where to draw this box yet because there's not a supply zone that's been created yet. So I'm just kind of leaving it out here in cyberspace for the time being, and going to sit on my hands with dollar CAD, guys. And that represents our most bearish asset on the Edge Finder. And while we're there, let's take a look at Euro CAD so we can finish up the bearish side of things over here. Euro CAD is right here. Let's get our daily so I can see my trend. Okay, so very similar story. Technically still have an uptrend, although we did kind of form a double top, and that can quite often foretell the reversal. But can we confidently say that's a reversal yet? In my opinion, no, because we haven't broken a structure. That right there, that structure right there would have to be broken. Very similar to dollar CAD that we just looked at. Break, close, retrace for possible supply to short in. Okay, so that's the only two bearish plays I see right now. As always, not financial advice, just showing you what I'm looking at from a structural breaking, retracement to a supply demand zone type play. But yeah, low lows and lower highs. I got to at least see a lower low on this case because we already got the double top. Now we just need a lower low and then a retracement, just like dollar CAD for a newly created supply zone somewhere in this general area. Again, it's floating out in cyberspace. Don't know where that zone is going to be created yet. So that's the two bearish assets right there for you. And let's see here. Back to the Edge Finder. We got CAD yen. We got pound yen. Let's go have a look at those for you guys. CAD yen. It's asking me to buy. Okay. So CAD yen. We got. Oh yeah. So look at here. So remember, we had a series of lower lows, lower highs, but then we finally broke a structure. Remember, I drew this white line up probably earlier in the week. Yeah, Monday, Tuesday, and we got that close. The second we get that closed candle, that tells me, okay, great. That's half my battle. That's half my question. Half my question of, hey, is this thing going to turn around? Is it going to reverse into my favor? That's 50% of my question answered right there. The other 50% is, can I find a decent zone to get a bounce from? Okay. Now, you guys have seen me draw up confirmation entries on a small time frame after price bounces into a zone. That's literally the same strategy for determining if we're getting a change of character like we have here. Okay, it's a break of structure, but it's a change of character because it's a upwards break of a downtrend swing high, right? So this is really kind of the similar thing. Only this time I'm looking for the bounce. So once price comes down into the zone that I'm watching right now, which as you can see, it just missed it by like a few pipettes overnight, it looks like. Once we bounce in, then I do the same thing. The same change of character that tells me, okay, I can maybe start getting in for possible longs or, going against the downtrend. That's the very same strategy for going down to a smaller time frame and waiting for the price to touch the zone itself. So it's essentially confirmation entry twice, really, if you stop and think about it. Except when price comes back to the zone, I don't want to just blindly buy it. I want to see the same thing. Or a bullish engulfing candle, or a candle with a wick underneath it with a lot of volume picking up. Remember, the volume is everything. The VSA in currencies, since we don't have regular volume, right? No centralized volume. So we got to get creative with it. Or that's the way I've kind of played with it. And it seems to work well for me. So, but anyway, yeah, all I'm waiting on is just a simple retracement. And then we can start looking for that trigger candle. Okay. So again, I don't do signals, not financial advice, just showing you what I'm watching out for on this particular asset. And that's the most bullish one. So that's partly why I feel good about it, because it is a very bullish signal. In fact, it's the only very, very bullish or very bearish that we have. Canada is pretty strong right now. Obviously, the unemployment rate just dropped 0.1% more today. In fact, I think they also had what other report was it? The employment change number? Yeah. So they also had a bullish employment change number, guys. Now, the previous was 87K. They forecasted drop to 11, but we actually only dropped to 18. So that's a plus 6,500 or 7,000, I guess, number on top of the forecast. So economists missed it by 7,000 jobs, guys. So that's a good number. That's two good red folder numbers, according to Forex Factory. And when it comes to employment change, that particular report will show up on some economic calendars out there as a medium impact. Okay. But we'll take the benefit of the doubt. Forex Factor is very good, I think, for beginners. It's very good for the top line numbers. And I think that's probably why it's the most popular. It's still my favorite. But then you've got other calendars that kind of go into the subcategories of the reports. Just if you want to get a little more granular on the details, it's more advanced, I would say, but probably not as probably not as beginner friendly. So definitely stick with Forex Factor, guys, especially if you're newer. It's just a lot simpler and easier to read, in my opinion. But again, it's giving us a red folder. So 2 red folder beats for Canada, which means the Canada number is getting stronger at the top. In fact, let's go to the heat map real quick. Excuse me. So this didn't change because the previous one was a beat as well, as far as the rate, unemployment rate. But 85%, and Canada dollar is your number one currency from a fundamental perspective. 7 of the 8 currencies, 7 of the 8 majors, guys, are strong fundamentally. They're 60% or higher. There's really just the one currency, the Aussie, that's missing expectations on, well, more than the others, right? So it's only a 40% beat rate. So, for me personally, again, like I mentioned before, I prefer only to match a strong currency with only a weak currency. But we got to get a little creative with these other 7 right now. And I think the only Aussie pair we had on the list, if it's still there, was, pound Aussie. So we'll take a look at that in a second. By my logic, by my metrics, that would actually be the one currency I would choose. But it's kind of hard to deny that, yes, the yen is strong, but Canada's just a little bit stronger on most of this data. That's why it's giving us a nice signal. So CAD yen, I already went through that. Pound yen was number 2 on the list. This one has an okay little signal as well. Trend is up. We broke a big daily supply. EMAs are pointing north. That's the alligator's mouth raising to the heavens, ladies and gents. So on a 4-hour chart, I do have this 4-hour zone inside of a daily. So there's my confluence. Now, the one thing as a reminder, on this leg out candle, like I mentioned yesterday, there's not a lot of volume there. It's just a ugly blue candle, little blue candle. So the volume itself is not really helping this picture. But I think that the other odds enhancers that are in favor will probably help this out. So we got 1, 2, 3, 4, 5 green candles exiting the consolidation. So that's a nice look. We also beat this structure right here, broke and closed well above that structure right here. So that's another +1. Now the final piece for me, and oh, by the way, the 200 EMA, by the time price drops, it's going to start evening out, give or take something like this, right? So that's another picture I want to see. I want to see price ultimately tag that 200 for liftoff. But where I want to be a little more cautious on this, because there was no volume, because the volume wasn't that great. How I want to be cautious is make sure, and when price drops, if and when price drops, I don't want it to just go straight down, coming in hot. If it does that, the momentum could just chew right through it. If I get in this trade, I want to see a little bit of basing structure, like a slowdown of basing. And then again, just like I mentioned to you guys yesterday, sweep low, sweep high, sweep low again, only this time drop in. That's just kind of the liquidity, the manipulation I personally want to see happen to kind of take over for the lack of volume on the leg out. If I see manipulation by the banks, and that tells me they might be trying to load up right here, accumulate, and then get their spring down and put in the rest of their order from the consolidation or from the zones themselves. So it's a little more intricate, guys. I know that's probably not the most beginner-friendly way of explaining that, but hey, at the end of the day, I gotta see the manipulation. I gotta see liquidity getting manipulated. So, hey guys, let me know if you have any tickers. I still have about 7, 8 minutes, 9 minutes, something like that. So that's pound yen, guys. I don't even really want to put an alert there just yet until I see this happen. This green projection line, this consolidation, I personally have to see this happen before I even fool with putting an alert here. If I don't see that, if it comes in hot and heavy, I'm ignoring it. So I need to see more work. As far as the edge finder, we also had, I just said the pound Aussie was, as far as the combination of weak versus strong currency, is really my favorite pair. So if we go to pound Aussie, take a look at our daily, as always on the right. Okay. So I've got a few things here, guys. So my EMAs look great. My swing highs, or I should say my higher highs, higher low structure looks great. So we're good there. So I can go back to my single chart, 4-hour chart. Now, what I did a little different over here was I took a anchored VWAP, okay, and I put it at the bottom of this most recent larger swing low. And the anchored VWAP is a really cool tool, guys. You can take it and you can put it anywhere, okay? You've got the normal regular VWAP everybody knows about. But I personally, when I use VWAP, I like the anchored so that I can plot it down wherever I want. If I want to put it here, I can put it here. If I want to put it here at this swing low, I can put it there. But I usually go to the most relevant, decently sized swing low. In this case, be down here, okay? Now, it's subjective because you can move it here. You can move it here. You can move it over here. It's subjective, but I personally just like to plot it down, again, at the lowest point of a decent swing low. So that's why I put it here, okay? Now, it's coming up, and I actually want to see this go through it as well. So if I go to my 1-hour chart, now that I know I have actually, I think that's a 2-hour demand. Let me go to it. Yeah, 2-hour demand. Is that right? Yeah, 2-hour demand. So this is my 2-hour demand I've got right here, because remember, this is an impulse leg that broke structure. Where's the underlying strength in that structure? I think it's right here. The true origin of this up move is down here, but there's really not that much volume. Remember, volume is everything. So that's why I'm not selecting the true origin. Right here's where the volume picks up, because that leg out right there, you see at the bottom, we got a yellow candle. It's, again, guys, volume spread analysis. You guys can find this for free on TradingView. And what I want to see is my 200 EMA, just like I showed earlier. I want to see that coming through the, where's my tool? I want to see it coming through my demand. And by the time VWAP rolls around, I'm going to be above VWAP, so that's good. It'd be nice if VWAP went through the bottom of the zone as well. But as long as I'm above VWAP, that's all I care about. That's a very, very important indicator. Guys, I don't really talk about it a lot, but the institutions use it a lot. So if you want to study something over the weekend, just study VWAP. Okay? I first found out about VWAP when I was trading penny stocks, believe it or not, because it works pretty well even on penny stocks. But anyway, I kind of pulled it into the FX side of things, and it works wonderfully over here as well. Just back test anything that you guys are wanting to try. Definitely do that first. Don't ever take my word for it or anybody's word. I've just found that it works pretty well right along the 200 EMA. Just an extra confluence. Again, it's not the reason to buy into this trade. It's just an added confluence, added odds enhancer. Okay. So anyway, by the time price rolls around, that's what I would like to see. I would like to see both those lines going through that zone, and then we're off to the races. Because by then, that's likely plenty of movement down to where even my volume spread analysis will go down to the extremes. Or volume spread, I'm sorry, my RSI, guys, going down to the 20. Again, 30-70 is the standard default setting, but I use 80-20 because I like the extremes. So that is my play on pound Aussie, and also taking advantage of the 1 week major currency that we have, and that's the Aussie. Okay. So that's probably my favorite plays right there, guys. I've got 4 minutes left. Let's see. I guess Swiss yen is the only one I didn't cover, right? Let's go have a look because it's giving us a bullish signal as well. Bullish signal, but we're still getting a series of lower lows and lower highs, guys. So probably out on that one. It's going to have to turn around, at least break some of these structures here on this daily. But then you got to contend with this 4 hour, this supply zone, this 4 hour supply zone. Or no, I guess that's going to be a smaller 2 or 1 hour. You got to contend with that as well. Pretty good volume on that. So I'd have to see a break of not only the structure, but also the supply itself. Break here, break the zone, and then maybe look for a play at that point. But that needs more work to be done. We've got a few plays going into the Sunday Open here in the States, Monday for you guys across the pond. That's probably I think that's about it. That's about all I got for you as far as what I'm looking at for the top setups. Dollar yen. Okay. I got a couple minutes. Obviously still playing the game up here it keeps dipping back and forth in the 1986 levels. Might as well call it the 2026 levels at this point. Looks like we might have had another little. Okay, yeah, that was the last intervention we had over here. Yeah, and dollar yen's the farthest thing from my list, guys. I've got it nowhere near anything. It's just there. There's no fundamental sentiment confirmation. It's not on the top setups. In fact, dollar yen's a +2. So have fun for the intervention traders out there, but I personally don't want any part of it. And Bitcoin, might as well take a quick look at that. Yeah, Bitcoin's still the lower lows, lower highs on the daily, guys. Remember, and I'd already mentioned this, but really I'm more interested to see if it drops back down into this daily demand, which is also at the bottom of the monthly. So there's nothing really changed over there for Bitcoin as far as I'm concerned. It's neutral. We are bouncing into this supply zone right here. This is a 4 hour supply zone. It is it is a downtrend, and that is a supply zone. That is a red supply zone. We've already had a bounce from it also. So it's already taken some unfilled orders to get a push down, but then it turned around and came right back. So I don't think there's a whole lot of strength right there. Yeah, I've got absolutely no read whatsoever on Bitcoin, guys. But just kind of sum it up because I'm almost out of time. Just going back to the top setups by itself. My favorite is the pound Aussie because of the strength versus weakness. But there's a few good plays on here, guys. You know, for the first time in a couple weeks, at least for the way I trade, I'm actually going into the next week with about 3 or 4 possible plays. So I like it. I like it a lot. Dollar Swiss, no interest on it. Dollar CAD would definitely be my choice between the two. Because dollar Swiss doesn't really have the same kind of supply zone, I don't think, that dollar CAD had back in the past. So it doesn't really have it's not bouncing into that major overhead resistance. We did have a supply zone right here on a 1 hour, I think. Yeah, 1 hour. So we did get a boost from that, which already pushed price down. So that really, I think, was the move to be had, but it's already over with. Talk about this supply. But again, the trend was not our friend. So I didn't have any interest in taking that. But anyway, yeah, dollar CAD it is, guys. If it gives us everything I asked for. I want a lot, and it's got to give it to me. Otherwise, it can kick rocks. Ladies and gents, have a wonderful Friday. We'll be back next week and do it all over again. Stay safe. Have a great weekend. Peace.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.